500. We were looking for a three-wave counter trend as such, and that's what we've got. We were looking for that at 61.8%, but it's a little bit lower than that as such. As you can see here, 61.8 at 1616, so it's lower than that. That's kind of okay, but obviously when we're looking for a wave 2 or an ABC retracement, it can't take out the bottom here, this low of wave 1 through here. So while that remains intact, then technically it's all fine. In tracking this down through here, we're looking at the A, the B and the C through here. I've been looking at this C wave here in a little bit of detail, and C wave has got 5 waves in it, and that's where it seems to be at the 1610. So when we look at this, we squash this up a little bit here for us to view at. So what I've been doing here from the top of wave B, been looking down for 5 waves down through here. We'll just cut this short here and we'll look into wave 3 and 4 here, and then down for wave 5. So if this is correct, then we really need that that low there to stay in place through there, and that would read as down for 1, back for 2, and this would be the 3rd wave all the way down to here with the ABC for the 4th, and then 5 waves down for the 5th wave here. So it's kind of critical that that stays in place. Sure, I made a mistake in the wave count, but that sort of seems sort of fine at that stage. So if you're going to go long off this, you could get cheeky and just put a, buy this and put a stop under here, but it'll be better to use the next important level, which would be the 1615 here, as a tested support here to build a trade in, and then looking to move on top of that one there. If it moves down through the 1610 in the next session, then you know that the bearish move is continuing to the downside. This is also important here for the US 30, the Dow, as the previous low here at 14.850 there would be 14.840, sorry, 3 would be the critical point there as well. But we would also think too that sure, this move coming down through here, would eventually find some, stick to the 15,000 here, the medium level, and then start working higher from this point. If that's not the case and the 15 becomes the resistance there, then you simply know that it's bearish, and we do have a bearish count for all this as well, because just using this chart here, as I pointed out the other day, is that this move coming down through here, we do have it as an A and a B and a C, but there is problems with this wave count in wave C here, and I'm talking about on the cash market as well, in terms that this move down through here as wave 1 would overlap wave 4 over here. So 1, 2, 3, 4 to here. Is this wave 4 here is overlapping wave 1 here, which breaks one of the 3 Elliott rules. So what that means is, it means that we could count this as an ending, as a leading diagonal triangle, as a wave 1 here, in terms of the 1, the 2, the 3, the 4, and the 5 here. It's possible, so that can be a wave 1 here, and this can be a wave 2 here. Well, maybe not even quite a wave 2 here, because this would read as an A and a B, and then a C wave back up to here as a wave 2, and then further to the downside through there. So look, there's a couple of possibilities, and as I mentioned before, we just need to allow them to play out, and we need to get confirmation. So the first bit of confirmation would be for here would be seeing this, a 5-wave structure to the upside here. Even this wave 1 here, even 5 waves here would be handy, because then we know we'd get that one there at least. And then if those 3 turned into a 5 here, then we would get another 5 after an ABC correction, and would be moving up from that point there. So there's a lot of confirmation to be, to come into play, before we can call something in here. We have been bearish on the local market with our trades because of this here. So now we need to be a little bit cautious of this. So on the S&P 500, that 1610, to maintain that support there is is reasonably important. Obviously, the 1600 is quite critical, and the same with this here as well. It also, like looking at the Australian market here as well, if the S&P 500 maintains that 1610 support there, and the Australian market here moves back above the 4700 here to develop support, this move, we are looking for lows in the market. But I know that looking at our sectors, the XMJ, for instance, has still got further to the downside to go. We can have a quick look at that actually. This is just the daily chart for the Australian materials sector, and what's significant here is this move up through here, because this move here is in 3 waves. Okay, so whatever happens here, this could be a more complicated correction in terms of a little structure like this as such. Wouldn't pull anyway. I'll leave that there. So it could get like that, but it is bearish because of that 3-wave structure. So at some point, and perhaps now and from here we would be seeing a 5-wave structure to the downside, probably to the 8,000 through here. But I can see that these here are just starting. So we've got wave 1 here, we've got wave 2 here of 1 degree, and then we've got this structure starting here. So even from this point here, we're looking at this here occurring. So that would be those 5 waves, and then we can overlap that with well, I'll just put this one here on this. I'll just draw another one and make it a bit easier. But that structure there would be overlapping that one there. So those 5 waves here, this 1, 2, 3, 4, 5 would bring us here, then the 4th and the 5th. So we do need something like that. So the materials sector has got got further to go down. When we look at the XXJ, the banking sector, we can see that it's already travelled quite strongly to the downside, and we're looking for it to move a little bit further to the downside. We can see that this is wave 1 here and wave 2 here. This is the 3rd wave in here, but this has still got further to go in here. So even if we take it from this point here, if we take that as the rally, we'd still be looking at this coming down a bit further. So we've got down for 1 here, back for 2, the 3, 4 and the 5 to come down. So still a little bit further to come down. I was looking at the XFJ, which is the sort of the whole financial sector as such, and I was looking at being attracted to this particular price point here, this 5,000 through here. So we can expect support to come in shortly on the finance sector, but there's more downside on the materials sector. The industrials, the XDJ here, we can see that this has got a clearer 5 waves down in terms of the 1, the 2, the 3, the 4 and the 5 here. But obviously this is not that you can see it that clearly, but it's slightly corrective here. So because it's moved up and moved down so much, it's a corrective pattern. So it can move down a bit further, probably to the medium level here. At the 1500 through here. So the markets do have a little further to go down as such, but of course these sectors are governed by stocks, and we need to keep an eye on those as well. But in looking at this market here, the cash market, we were looking for support on the 4720, the 72 number. I knew that was important, and the second step would be the top of Group 1, but it never found support on top of Group 1, the 4730. So a breaking of the 4720 would send it short, or at least out of any longs at that point there. But this here does remind me of a wave 4 price action, and this being a wave 5 here. And in this wave 5 here, there's 5 waves, the 1, the 2, and the 3rd wave is either to here or to here, and there's still a little bit more to go through here. So I was looking at if the 47, now that it's tested below the 47, if the 47 becomes support, then that would be the first step of the market being positive through here, because in the next structure here, we've been tracking This is in 3 waves here as being corrective, failing to find support on the 4800 here. So we kind of got to look at counting 5 waves down through here. Now, this is either a wave 4 here, and this is the wave 5 to finish that correction from this point here, from that ABC here, and down for 5 waves here, being wave 4 and wave 5 here. If that's not the case, and we've got wave 1 to here and wave 2 to here, then we're going to move very sharply to the downside through here. So that 47 is quite a nice line in the sand. The next supporting factor down here would be the 46.50 here. So keep an eye on that there. And the same with the European markets as well. I'm going to have a look at the commodities now. Okay, starting with oil here. Yesterday we were in here somewhere and we were looking for this to move up, and what we were looking for a 3 price swing in through here as such, if you remember, and then a move up higher through here. So this move up through here, obviously an A and a B and a C wave through here. So this move up through here is in 3 waves. So if there was going to be a move down through here, it would be in 5 waves. So we would be seeing, something like this here before we start to see a move up as such from that point there. Now, if I'm wrong about this, then the 96.50 would become the support here. So if we look at that on a smaller time frame here, we can see that the A wave, the B wave, and the C wave back down through here, if that's going to be the case. So what's the best way to deal with this? Look, if the 96 becomes the support, then moving along from that space, as that will be the upside from that point there. So you can that would create the next high, so to speak, and 95. Yeah, look, otherwise we're looking for 5 waves down into this area here somewhere. And if that's the case, then that's fine. Then look for the trade up, but otherwise the 96 as support for the next leg up there. The copper market is pretty much on track. Yesterday we were looking at a possible low being in place here. That seems to be the case, and now we've got, as you can see, we've got sort of 3 waves up through here. So if I got that on a smaller chart here, okay, so look, we're starting to get that 5 waves up, aren't we? So we've got the 1 there, the 2 here, the 3 here, the 4 here, and the 5 starting up here. So once we do get 5 waves up through here, in making a new high here, that will give us 5 waves. So then we would be, after that, we would be seeing a counter trend in 3 waves, an A and a B and a C, probably retesting this 320 through here. Once that's done, then we'll see, because we've got 5 here, that means that we'll get another 5 up through here as such here, which will take us up to around the 325. So that will give us some support for the material sector, and also the AU as well, the Australian dollar. So bear that in mind. But at the same time, we can still see that, well, let's just have a look here. This is getting interesting now, because the Australian BHP is the only one that's showing this positive wave count to the upside, even though that we've been short from these 2 bars here, or this time period through here, and we're looking at the 61.8 retracement level at the 32.50 sort of area through in here. So it'll be interesting to see. We are short. If we get if one of these highs gets taken out, well then we're on that. Well, we have not trading long on this one just yet, but that was part of the bigger plan. But we're not seeing that in the material sector, or we're not seeing that in BHP in the US as well. So BHP here in the US here as such. If we look at this structure from here, this move down through here, we can see that if we take that high point from here, we've either got wave 1 here, wave 2 to here. But even so, if we just forget about those for a moment and just work with this here, we've still got we've still got wave 1 here, wave 2 here, and this would be the third wave down through here that's not complete just yet. So it's still moving down. This will also have a little 5-wave structure in it as well through here as well. So there's still there's still more downside on the US BHP, and we also know that from the materials sector that we just looked at as well. So I'm sort of very cautious about this situation here, but forever hopeful, but at the same time we need to trade what we see. So let's see what comes in at around this price point here in terms of, well, volume to start with. What else is interesting here? No, that's sort of it. So the gold market is pretty much on track with our thoughts from from yesterday, and we were looking at a 5-wave structure to the downside, and then we're looking for a 3-wave price action to the upside, to the 50-60% up here at the in this area up through here, and we're getting that. It does concern me a little bit. That strong move here doesn't really remind me of the price action or personality of a C wave. It reminds me more of a wave 3, so we also need to be cautious about that. Have I got that on a closer, smaller scale? No, here we'll just have to work with this here for the time being. So this little move up through here as such, if this support stays on this if it gains support on, is it going to move this one? No, that's part of that. That's part of that. So if the excuse me here, if the 1390 here becomes the support, because so far we've got like 3 waves here, so it's corrective. If support is found on this 390 here, then you know that we're going to be retesting the 1400 here, and we'll be looking for this C wave to move up through here. I need to pull this apart here, but I can see that 1, 2, 3, 4, 5 possible one more wave up there. If, however, if I squash this up a little bit here, if this 1380 here becomes, if this market moves down from here and finds the, if it moves down in 5 waves and eventually in its own little wave finds the 1380 as the resistance, then we know that we're going to be going further down. Not only that, a move down through here would be overlapping the top of this one here, creating a bearish picture here as well. So it's a long way, but look, if it occurs, then you know that the A, the B, and the C correction is completed, and we can look at further downside from there. And there will be a fair bit of fair bit of space to come down through here. So it's all going according to plan. Let's just allow this to play out through here. The other important aspect too is that the silver market, where the gold market retraced 50%, this market's only retraced like 40%. So it's actually showing, it's weaker, and I can see that it's got that sort of overlapping wave structure here. So it's corrective, it's creeping, it's struggling to move to the upside. How we count this in terms of an A and a B and a C, or move up here in line with gold and so forth. Look, this would probably be the better market to short as such, but just we need to be mindful that it could catch up and end up through here as well. So what we can do about that is look at the levels. Of course, the 22 here is the closest largest number, and then we've got these levels here. So as you know, I like the 72. So if the 72 here became the retested resistance, then that would be one of the first signs of weakness here. And this is a 1-hour chart, but if you go into a 5-minute chart, if we've got 5 waves down through here as such, then you could work with that as well. So 5 waves down, that looks like a 1, 2 there, 3 here, 4 here, and a 5 here. If that's the case, then we'll get an A and a B and a C up through here. But because we've got 5 here, and then we'll get 3 here, then you know that we'll be looking for a 5-wave structure coming down through here, and this is the area that you want as such, depending on what you know and what you can see within this little area through here. You can layer contracts in through there, and of course there is the 65 here, and also the 80 here as well that you can use. Then the midpoint here at 50 here would be the next one at that point as well. Expect to bounce off that once that's completed. So we are start looking for setups on the silver for the downside. Alrighty, let's have a look at Forex. Okay, the US dollar through here, we were looking, as you know, we're looking at wave 4, retesting this area here, the 82, and then a move lower through here. Now, this can be in place now, this little wave 5 through here. So we'd be looking at wave 4 through here. I don't know if it's going to pull that far back up, but we need to take it as it unfolds. If I look at this little 5-minute chart here, we can see a nice clear 5 waves up through here. We've got wave 1 up to here, and then we've got wave 2 coming back, which is sharp, simple and sharp. Then the wave 3 up here. We've got wave 4 here, sideways and complicated as it is. And that's normally the case because a wave 3 is an strong emotional event, and it takes time to get stronger the event. It takes time to settle and adjust. So we do have this little 5-wave structure up through here, retesting 81. Now we can expect an ABC correction back, and then another move up through that. So this could be the start of that rally that I've just mentioned coming in through here. So we need to keep an eye on that. And of course, we're going to find support down here at the 80 anyway. We're going to see it bouncing. We see it bounce into group 1, 2, and 3 here anyway, and that's what's occurring. So there's going to be more bouncing going on here, and that's going to obviously reflect back into the euro up here at we're looking for a new high above the 133. So that's coming to play now. So we could have this top in play here now as well through here. So there's also there's with the euro, the European Central Bank and their bond buying program is in a 2-day hearing to find out the legality of what they're actually doing with the so-called outright monetary transactions that they're completing. So the result of that's obviously going to impact on this, and there's going to be uncertainty in this, and I feel that uncertainty will come in through here as a wave 4 through here, and then we'll see if it's a positive outcome. We'll see that wave 5 push up. Now there will be headline driven news, so things can happen a little bit sort of quickly through that, but let's just see how we go. But our wave count so far is looking for the top of wave 3 here, and looking for wave 4 to pull back. Now, as that little 5-wave structure up in the US dollar, then we'll see this to the downside through here as well. But I can see that this is only in 3 waves through here so far. So if this low gets taken out at 133.20, then it will create 5 waves to the downside. If it moves up through the top of wave 1 here as such, then so we could say support on 133.40 would be a positive attribute there, but otherwise we'll see it move down through here, giving us our first little 5-wave structure to the downside. It's on close at the moment, so it's going to be a bit softer on the volume, so to speak. So, but once it sort of cranks up again, just keep an eye on that there. Right, the Australian dollar. Okay, starting in the bigger picture here, we're basically working with 95 here. Okay, so in the bigger picture, the 95 is important because it's the halfway mark between the 90 and the $1 here. So, once the market sorts itself out through here, whatever side it chooses, then that's the direction it's going to move to. So we can see, and this is the normal way, the classic trading levels pattern as I see it. A market would move to the level, in this case, find support has its bounce back, finds supply resistance, then moves through it, then comes back and tries to check on it to sort of seal it up as the resistance, and that's what it's doing now. If the outcome is on support there, then we need to look at higher ground up through here. If it develops as resistance through here, then we will be seeing more downside. So what are the implications of that? Well, this move going up through here so far is in 3 waves. So if it can confirm those 3 waves, then let's just squash this up through here, just on the 5-minute chart. So this is the move up from the low here. So technically we've got 5 waves up for the A wave, which we were looking at yesterday. I think we were up to here somewhere, but then we got this 1, 2, 3, 4, 5, this extension in there for the 5th wave. So we can look at this as the counter trend here, and then the other 5 waves up through here. So I've labelled it as an A and a B and a C. That's a bit premature, but if this market moves down through here and takes out this low here at the 94.20 area here, then that will confirm this being an A and a B and a C wave at that stage, okay? So, but don't get lost on that, because at the moment, the move up is a move up, and that's fine. This current move down we've got here is also in 3 waves, a little bit like these guys here. So this A, B, C here is a bullish corrective pattern. So if this completes and finds support on the 95 here, then we can go long from that point there, and that would be in line with copper as such, the base metals. So bear that in mind, but also bear in mind too that you need to work out what correlations there are with the S&P 500 and also the US dollar index as well. So if that US dollar index finds support on 81, then it's going to add a little bit more sort of pressure here as well, and also the S&P 500 support on the 1610 as well will come into play. But in simple terms, I just think we should allow this to, in trading terms, allow this little area to play out through here in terms of an A and a B and a C wave. I haven't pulled this apart through here just yet, but 1, 2, then 1, 2. It seems to still be working lower, and while it's locked under the 94.72, that would be the case, and you would add to the short position under the 94.65 here. But look, if it bounces off one of these points, if it completes this 5-wave structure down through here that we need to have a look at on a 2-minute chart, if it finishes this here and then moves back up here, then you know you've got yourself a long position, because first of all you've got the A, the B and the C here, and then with this moving up through here, moving up above this price point here would confirm that as an A and a B and a C, because as it stands at the moment, this can be impulsing to the downside, and then this A, B and C here would be correct. So a move down through here, taking this out, would confirm that there's a bear market in play. If it doesn't do that and it comes into this little area through here and finishes here and then moves up through here and finds support here, then you know that this high is going to be taken out, and then you would look to scale in and build a trade in through the 95, 10, 20 and 30. If support is found on 30, then you know that you'll be at the 50 and higher from that point. So that's worth looking at there. The other thing I want to point out with the commodities as well is that, and the weakness, obviously the Australian dollar and the commodities will sort of play out together. But yesterday we were looking at the UBS commodity index, and we were looking at this being, this basically talking about this whole thing being a corrective pattern, and the reason for that in terms of 3 waves up here, overlapping wave structure at this point, straight away points that as a corrective pattern, and this is unfolding now here. So we'll be looking at, in one way or another, be it from, I'd have to take it from this point here, would be looking at a 5-wave structure to the downside through here. So there's more in the commodities to the downside, which would also be in line with the materials sector that we pointed out as well. So be mindful about being long on the commodity side of things. The the wave count for the S&P 500 is really subject to the policy meeting coming out in June from the Feds. Will they continue the bond buying process, or will they be easing it off? I did put an article in the quotes section of the day ahead report there. An article, probably it's very opinionated, but it's got a few valid points in there that does a great job in reading between the lines of what the Feds and their members have been chatting about in regards to, reining in the bond buying process, which has to be done at some point. So it's a question of when. So anyway, that's that. Alrighty, that's that. So we'll. Even though, we'll just continue to sort of be cautiously short within our book. So, alrighty, thanks for listening.